everybody. Welcome, everybody. Let's get started. Tesla. Let's see where Tesla is today. It was down as much as 10% today, just like expected. I think the stock is worth about $100 per share, given all the challenges ahead of it. The volume is elevated today. Extreme trading. I think there's some margin squeezes going on. Accounts with margins are getting squeezed today. It dipped below $300 per share, and I think it has a way to go. I think it's headed to $100 per share. Oh, Wes is here today. Let's see if Wes would like to come up and discuss Tesla, Nvidia, or anything else. Overall markets, Dow Jones up 0.4%, NASDAQ down 0.9%, S&P 500 down 0.3%, Russell 2000 down 0.1%. So the major indices are going back up to neutral. It's really just the Tesla is pulling down the market quite a bit. And then other Max 7 companies are down about 1-2%. Amazon down 2, Meta down 2. All the other Max 7 are down 1%. Apple is up in the green today. Energy companies are lower by about 1-2%. Please let me know if you can hear me on YouTube. And looks like it's fine for now. Test. Give me 1 second. Test. Okay, good. Vladimir says he can hear. Great. Okay. Let's see what else is new. Indices touch over 1 month low on growth and inflation uncertainty. There's quite a bit of a macroeconomic data that's coming out. That's not great for the markets and in line with my recession theory. Wall Street's main indices fell to touch a more than 1 month low on Tuesday after fresh economic data indicated consumer mood was deteriorating and investors braced for possible fallout from tighter U.S. trade controls on Beijing. The conference board, this is the kind of thing that I've been expecting. The conference board consumer confidence deteriorated in February, but we're going to get back to that. Wes, how are you?
Hey, good. Hopefully you can hear me okay. I'm driving.
Yeah, everything seems fine. We can hear you. I'm trying to just make sure everything's fine on YouTube. Okay, what do you want to talk about? What's new with you?
I did a really long drive with my family, almost 3,000 miles, and I had a really good time with FSD. Learned a lot of new stuff, a lot of corner case stuff. So that's kind of new. I've with my family, almost 3,000 miles, and I had a really good time with FSD. Learned a lot of new stuff, a lot of corner case stuff. So that's kind of new. I think the other thing that's new is that on this dip, which I perceived as a dip, I purchased another 1,000 shares, so I'm even more invested in Tesla than I ever have been. So that's the other thing that's new.
Okay, that's great. So you're buying the dip on Tesla stock. Did you say you bought? Did you just say like how much you bought? Did I miss that?
1,000 shares. I posted it on X.
Okay, great. So you're making a big investment. That this is the bottom. I'm gonna. Is that because of the FSD in China news?
Yeah, that is part of it. The other part of it is Ryan McCaffrey's interview of Lars, and the very specific thing that he talked about that I picked up on, because Lars is like my current top hero at Tesla for engineering. And he talked about two very specific things, which I thought was very cool. He talked about the, I guess you could call it pigment injection into the polyurethane of the Cybercab panels, which is pretty cool, which means no paint shop. And then Cybercab has, or Model Y has a brake-by-wire hybrid system, so it's partially backed up mechanically with the older hydraulic method, but it has brake by wire. That was the last piece for Cybercab to actually make that vehicle reality. And now that they've put that into production with Model Y, I feel like it's kind of game on for Cybercab. So I feel like those were kind of big things from an engineering perspective.
Okay, great. So you think when you say cybercab, you're talking about robotaxi, or are you talking about the cybercab with wheels, with a
I'm
steering
talking
wheel?
about yeah. I'm talking about both the lower cost variants of vehicles because this allows the cost of goods to be lower. So with and without human controls.
Okay, so even the human control one, you're saying is going to have both brake by wire and steer by wire.
Sorry, you cut out there. I do think they'll have steer by wire, brake by wire. Yep.
Okay. I mean, do you think steer by wire and brake by wire, like the fact that this has brake by wire as opposed to hydraulic braking, um, do you think that's going to lead to customers buying it, especially, or do you think that this is kind of like the final milestone to get to robotaxis? Is that why I'm trying to understand why you bought the dip in such a big manner?
Yeah, it's the kind of the amalgamation of all of these things. So I'm very hopeful that they're going to bring up the Cybercab line quickly. So I'm hoping that we will see that in earnest. Kind of like fully on its ramp. By the end of the year. These lower cost vehicles, I think, are all variants of that. So and those are supposed to be before the end of the first half of the year. So those are kind of the reasons that I've gone and felt like this was a low point. The other thing that I mentioned earlier was the China FST. I'm planning on being there sometime in April or May. I still haven't finalized those details, but it's really funny that Kyle of Out of Spec did something very, very similar to what I'm doing. And he had a tour of the Neo factory. And oh, it was just so much opportunity to ask engineering questions that, because he's not an engineer, he thinks like an engineer, but he's not an engineer. And there's so many opportunities, to ask questions about like what's going on there. And I didn't see anything that was reminiscent of like an innovation that Tesla doesn't have. So I'm still hopeful that Tesla has a lead in manufacturing. I very much hope to visit BYD, however, because I think their manufacturing line and their software processes actually are innovating above and beyond what Tesla's doing. But from the standpoint of why I invested, it's China and FSD that's on now. That very much takes away the biggest con that I had to my investment thesis because other companies are now releasing their versions of FSD. So that's why I did it.
Okay. Do you think FSD in China will lead to a dramatic increase in demand for Tesla vehicles in China?
I think once they announce their monthly plan, I don't know that they have a monthly plan yet for these extra services and features. So I'm looking forward to seeing that. I think that's going to lead to an uptick in demand, though.
What's your kind of understanding of how BYD ADAS systems and other Chinese companies' ADAS systems compare to Tesla's FSD today?
The only one that's comparable is the one that's on that XPeng, um, that 3.2 system. I'm trying to remember the name of it off the top of my head, but I can't remember it. The last one that I reviewed, that one looks very, very similar, if not better, because it has deeper map metadata. And I think it explores that map data into the HD map kind of arena. So it does things a little bit more detail. It can predict things a little bit better. I don't know that it's smoother though. And so this is why I want to go do the, firsthand experience.
I guess my question to you is, if there's one Chinese company who has replicated, if not improved, FSD already in China, what's keeping other Chinese companies from doing the same? Does this one kind of Chinese company have some sort of unique advantage that the other Chinese companies don't?
Yeah, it's a great question. I don't know. I don't know how like kind of bought in the Chinese government is with autonomy. I don't know how important that is to them. I assume that it's kind of on parity with the United States. So I assume that just like the electric car ramp taking over market share, autonomous vehicles are going to take over market share. We've seen other types of autonomous vehicles on the road in China. These autonomous, kind of mini delivery vehicles. Those things are taking off because the cost per mile is so much lower than having a human operated delivery vehicle. So I feel like, cost in and of itself, and the ability to, grab market share and profit is the writing's on the wall with autonomy. So the companies that are leading there are going to grab that. So I think it's going to have a fast ramp, a much faster ramp than in the States, because we already see several competitors there, with production systems. The Apollo Go is one, and then these delivery ones are others, and they're scaled to many cities, with tens of millions of people that they're delivering to. We just don't have that in the States yet. So that ramp is going faster than here.
Okay. I guess where I disagree with, I agree with everything you said. Um, I think the, I think all cars will autonomous systems in the future. I guess where I disagree with you is that that's what matters. I think what matters is what kind of economic profits that Tesla can charge for it. And if BYD and others are included for free, then Tesla's going to have to do the same thing. And
Yeah, if the price war continues, yeah, I would agree with you. Everything in price wars becomes a commodity. If everybody can continue the price war, but it's the race to the bottom usually results in only a fraction of the companies surviving.
yeah, and I have no doubt that hundreds of companies in China are going to go bust, and Tesla China will survive in some form. But I don't think Tesla will ever make a buck in profits in China, whether it's FSD or vehicle sales or what have you, or energy. There was an article today on Seeking Alpha. I don't know if you have a Seeking Alpha membership. This is not an article that I published, but
I don't.
it was a really good article. This is the best China analysis that I've ever read on any platform. And it's titled Tesla China Green Prospects for Calendar Year 2025. It goes through all the automakers, all their models, and the discounts for each one. This guy clearly has done his work. It's a long article, but it's very informative. And it also has a section towards the end about energy. And it basically says what I said a few days ago in a tweet, which is energy, actually, a few weeks ago. Tesla Energy will have an even harder time than Tesla Automotive for the reasons that we discussed earlier and in creating profits. And I just don't see how Tesla can survive in China without making any profits. So I don't really see any sort of expansion plans, whether it's FSD or not. I don't think it's going to make a difference. But I wish you best of luck with your investments. I hope that it works out for you. And
Sweet, thanks. I'm gonna have to go back to listener here in a few minutes.
okay. Um, Is there anything else like Nvidia's announcing tomorrow? Any views on that?
No, I know they're ramping Blackwell, so I'm really interested to hear some Blackwell information.
Okay, cool. Luce, any questions for Wes?
Yes. So I wanted to ask what is his timeline for Tesla being able to commercialize the autonomy?
Yeah, great question. So we're going to see the beta in June in Austin, and my experience on my long drive is that I'm experiencing a critical takeover, like once every 15 or 2,000, 1,500 to 2,000 miles when it's mixed highway and city driving, like longer distance. So I'm going to be interested to see what their geofenced area is. I'm going to be interested to see all the details of their solution. But from a prediction of commercially viable, I don't see why it would stay in beta very long in Austin once they see that the whole process has some amount of cost associated with it, and then some amount of value associated with it when they see the demand, and they're able to expand that to take care of the demand. I think that's what they're literally going to wait to see how many vehicles it's going to take to satiate the demand. Because as the price drops, you're going to see demand increase. You're going to see people use the service more. So I literally see it by the end of the year. I feel like they'll go out of beta before the end of the year in Austin.
Luce, no hands.
Yeah, Wes, this is my problem with your thesis, is that I honestly don't think Tesla is anywhere close to have the safety standards to able to commercialize FSD on a large scale. And as you said, you have 2,000 miles between critical intervention, while combining highway miles and city miles, and that's very little. Do you agree? So that's really what I
Yep.
don't understand.
Yeah, I think it's a low amount of critical disengagements. So I feel like they can run their service at a profit while allowing a great value to customers. So I feel like their demand is going to be really high. So they'll be able to undercut Waymo and Uber by potentially like 50%. So I feel like people will just gravitate towards their solution. Not to mention they'll be able to take the highway. That's why I want to see the geofenced area. Because if they're going to get you there, 50% less cost and in half the time, if you're going to go from like downtown Austin to Round Rock, then that's a huge deal. Like everybody will use that. Like, I mean, they'll need, somewhere between 2,000 and 5,000 vehicles, more than likely to satiate the demand by the end of the year, if that's the route that they go down.
Wes, I have also another question. So soon there is going to be an update, and there is going to be so do you have any prediction on the future update improvement on performance?
Yeah, so I think the next feature implementation that we see should offer like quite a big jump in reliability, which pretty cool. I just went through a railroad crossing where the arms started to go down. Let me save that. That was super cool. Anyway, I'll talk about that tomorrow. The context window improvement should like drastically improve certain scenarios where I've seen my critical disengagements. And granted, I've only had 3. And I'm going to talk about those tomorrow. It should completely eliminate those because they're very, very difficult. Even like for a human driver would technically make the mistake. So I feel like that's going to add a lot of really interesting reliability improvements. And then on top of that, I think we're going to see some really interesting improvements. Excuse me, with audio inputs. I don't know exactly what we're going to see and when, but like I'm assuming that both of these are going to improve reliability. I actually had really good behavior with police lights and fire truck lights and ambulance lights. I experienced all of those on my trip. So I'm going to talk about that tomorrow as well. But I'm going to have to peace out. Sorry, I only had a few minutes today.
Yeah,
There's
that's great.
great questions.
Thank you so much, Wes. Appreciate it. All right. Luce, I remember your price target for going back into the stock was 200. Is that still the case?
No, Yaman is definitely lower. It's definitely lower. The fundamentals have completely deteriorated. The brand value with Elon involvement in politics has definitely taken a hit. And I see a revamp of ICE vehicles over EVs. And so this all changed since I sold. And in my opinion, it's going to go lower, much lower.
Okay. All right. Thank you, Luce. Unless if there's any other questions, comments on Tesla, we're going to switch to macroeconomics. Thank you, Robert Roth. Robert Roth for subscribing to my ex. I appreciate it. All right. Um, Let me see if there's any other tweets that we're going to cover on Tesla first. Elon says to James Doma, we just use publicly available video on the internet of roads and signs in China and use that to train in simulation. Okay. And in a response to Richard Cooper, who said, I legitimately dislike electric cars, but I'm thinking about buying a Tesla just for Elon. Elon said Tesla's rock. Tesla account retweeted and said, or a tweet by Ray says FSD in action in Beijing and being live streamed. Tesla's initial impression more human-like, smooth, and confident compared to other similar Chinese systems. All capable of self-correcting if missing turns or planned route where other systems may be hesitant. Okay. Super heavy news. Deliveries of new Model Y start tomorrow in China. Okay. Roland says Model 3 sales rebounded after Chinese New Year to a new 12-week high, but they're still very low. I mean, I guess what's kind of missing right now is some people are assuming that the new Model Y is going to increase sales. Some people are saying that's not really and there are other reasons why the sales are lower. So I guess we'll see. We'll let 2025 show us which one is correct. Tesla will acquire parts of the insolvent German high-tech parts maker Mons AG, including more than 300 employees. I think 100 of them is going to get laid off. Sounds like. I don't think that's the material news. FSD version that's rolling out in China is 13.2.6 on hardware for vehicles only. Couple of departures from Tesla. New Grok uploading to App Store tonight. Major improvements heralded. And 6,900 new Teslas were insured in China last week. Sawyer says, I'm buying a new Model Y because I want a vehicle from a brand that makes the safest cars on the road. I want easy access to a reliable charging network. I want to buy this car from a company do more than any other for the environment, etc., etc. Cybercab testing a Gigatex today without its gold wheel covers. Okay. Lars about Model S and X said something like there's going to be a major refresh on Model S and X soon. Probably include hardware 5 is what I'm guessing with the new Model S and X. And I don't think hardware 5 is going to be enough for autonomy either. Let's see. I think that's about it for today's Tesla news. Unless if there's anything else. Let me look at my replies. Let me look at YouTube. Okay. Not much there on Tesla. All right. Let's switch to macroeconomics. Today we got consumer confidence report that was way worse than expected. And everybody expected, I mean, every analyst that I follow expected a strong reading because consumer confidence by the consumer board is supposed to be more focused on labor market. And the assumption right now in the markets is that labor market is still strong. There's still full employment and there will be full employment. And this is the part that really is keeping anyone from concluding that we are in a recession because initial weekly claims have been low, around just above 200,000. And unless they go above 300,000, it's really hard to say we're in a recession. So, but the signs of labor market weakening has been increasing. And I think today's consumer confidence report is a major one. So let's read through this report. Um, in the meantime, the markets have turned down again. Tesla's down, Nvidia's down, etc. So I'm going to read through this report. Settle back. If you have a question, comment, please request to speak. If you want to read more about Tesla, the article is at the top of your screen. Highly recommend reading this article. This is my most read article so far, and the feedback has been very positive about how useful it is, etc. So, consumer confidence dropped sharply in February. Pessimism about the future returned. The Consumer Conference Board Consumer Confidence Index declined by 7 points in February to 98.3. The Present Situation Index, based on consumers' assessments of current business and labor market conditions, fell 3.4 points to 336.5. The Expectations Index, based on consumers' short-term outlook for income, business, and labor market conditions, dropped 9.3 points to 72.9. So this is an indication that we are just on the verge of a recession. That one right there, the Expectations Index, based on consumers' short-term outlook for income, business, and labor market conditions, dropped 9.3 points to 72.9. I'm going to take a note of that. I'm going to take notes. I'm going to spend some time on this report. So if you're interested in something else, you may kindly exit. Let's see. So today's date is 2/25. Consumer confidence, expectations sank 9 points to 72. So let's say 73 level. Okay. So this is an indication that we are entering a recession. Quote. Sorry, the cutoff date for the preliminary results was February 19, 2025. Okay. For the first time since June 2024, the expectation index was below the threshold of 80 that usually signals a recession ahead. Okay, so this is very serious. This is why the markets are selling off. All right. Quote. In February, consumer confidence registered the largest monthly decline since August 2021, said Stephanie Gouchard, senior economist, global indicators at the conference board. This is the third consecutive month-on-month decline, bringing the index to the bottom of the range that has prevailed since 2022. Of the 5 components of the index, only consumers' assessment of present business conditions improved, albeit slightly. The views of current labor market conditions weakened. Consumers became pessimistic about future business conditions and less optimistic about future income. Pessimism about future employment prospects worsened and reached a 10-month high. So this is very important because it also indicates that people might start or accelerate tightening their purses, which feeds into retail sales, which already disappointed last month or last week. So it might be even worse next month. February's fall in confidence was shared across all age groups, but was deepest for consumers between 35 and 55 years old, which is, by the way, the prime group for Tesla buyers. Consumers between 35 and 55 years old. The decline was also broad-based among income groups, with the only exception among households earning less than $15,000 a year and between $100,000 and $125,000 a year. So very widespread. Guchard added, average 12-month inflation expectations surged from 5.2% to 6% in February. And that's a really bad situation for the Fed. So if I'm the Fed chair and I'm looking at this consumer confidence sinking, I want to cut rates, but I can't cut rates because of the next paragraph, where inflation expectations have been surging for several months now, and now at 6%. The increase likely reflected a mix of factors, including sticky inflation, but also the recent jump in prices of key household staples like eggs and the expected impact of tariffs. References to inflation and price in general continue to rank high in write-in responses, but the focus shifted towards other topics. There was a sharp increase in the mentions of trade and tariffs, back to a level unseen since 2019. Most notably, comments on the current administration and its policies dominated the responses. So that indicates to me there's a bit of a divergence between Democrats and Republicans again in this survey as well. So we'll see which side wins, I guess. But in any case, the average inflation expectation surging in several months in a row is not good. Consumers' views of their family's current and future financial situation were less positive, retreating from the serious highs reached in January. The proportion of consumers anticipating a recession over the next 12 months increased to a 9-month high. These measures are not included in calculating consumer confidence index. Consumers' bullishness about the stock market also retreated. Only 46.8% of consumers expected stock prices to increase over the year ahead, the smallest share since April 2024, and down from 54.2% in January. We have a request to speak. Let's take that question real quick. Stephen, go ahead.
Hey, Iman, I just wanted to know, with what you posted on Seeking Alpha, is there anything that would change the direction of Tesla in the near future for you?
I mean, what do you mean by near term?
Near term, I guess, would be the next 12 months. 12 to 24 months. I think that's what your outlook was for your price target, right?
Yeah, I mean, I don't really publish an outlook. I think the company's intrinsic value is $100 per share. If it gets there tomorrow, then fine. If it gets there in a year, then fine. And other things can happen as well. So, what can change the direction of the stock? I mean, if we have to kind of say something like Elon exits Doge and goes back to Tesla full time, that might be one thing. Or some sort of a software update that just makes perfect robotaxis, which I don't see that happening. That's less than 1% chance. Powell coming out and saying we're gonna go back to 0% interest rates tomorrow. That's also less than 1% chance. So just very unlikely events. Otherwise, I think the stock will continue downward. Steven?
So just to follow up to that, I know people used to ask, or maybe you even used to ask, if Elon would leave, would that improve things? Like, have we already crossed a point of no return for Tesla, or is there still a way to salvage the company? Is my follow up question, because I don't think there is at this point, but
I think Tesla without Elon is just Rivian. It's just another Rivian. I don't think it would survive. I don't think Tesla would survive without Elon, and that's why I'm short, because Tesla is without Elon right now. And
Thanks,
not
sir.
just an Elon, but an Elon that's committed. Focused and committed, not just like a figurehead. DGM.
Hey, good afternoon. Good evening for anyone. I just had one kind of question or comment, something that I've been thinking about. And I used to kind of think of it as more of a joke or a taunt, but now I'm wondering if there's something to it. And it kind of goes like this: if you don't have ice technology, you ain't got shit. And I'm kind of wondering if the biggest winners are going to continue to be those that are that have some kind of ice component and that are also electrified. So like Toyota is an example of that, BYD, etc. And when you talk about Tesla being only electric, it almost feels like it's a gap in technology that they don't have. And they could really only get it probably, by partnering. And then, you know, where do you go from there? Anyways, I just kind of wanted to drop that because it feels like it's more and more relevant as time goes by. And I'll just go on mute.
Yeah.
And I'll be here if anyone wants to discuss.
The first time you speaking?
I think it's second time, actually.
I'm okay. Well, welcome back.
Thanks, man.
So I think it's kind of it really surprised me how people are so like, and I should expect it. If I knew human behavior better, consumer behavior, human behavior, um, I would have been able to guess it. But people just have a tendency of picking the middle option. They see the middle option as a conservative, safe option, and hybrids are really surprised me. I did not expect hybrids to basically kill EV growth to this extent before, and it's so clear now. Both Toyota hybrids in North America and elsewhere, as well as BYD in China and elsewhere with their hybrids, are just killing EV growth. They just killed EV growth everywhere. So it's a shame because I do think fundamentally EVs are better, but this charging problem, people just couldn't get over. The masses couldn't get over this range anxiety. And I did spend some time with a Tesla, some time with it, and I realized like I don't think charging is that big of an issue. You kind of go to Target as the time just in the time that you can buy a couple of items. By the time you come out, it's already charged, and I never had an issue charging. So yeah, it's a shame, but
Yeah, yeah, and then my only, I guess, one more comment on that is, I think that vehicles are super like use driven. Like even a FEV that gets 45 miles might allow someone to do 80% of their miles electrically. And I know it's an old argument, but as a FEV owner myself, when I'm in kind of local mode and I'm not doing any kind of road trips and stuff, like tons of my miles are electric. And then when you look at some of these newer products like this Ram truck coming out, you know, I think that these range extension kind of things and being able to use the truck like a truck and actually tow a boat a couple hundred miles, no problem, or more, right? Which you can't do in today's BEV only. So I think that, for certain applications, it's just not going to work. And we know that now.
yeah, I think EREVs, which are kind of like more towards EVs, but they still have a gasoline engine or diesel engine, whatever, is kind of, it looks like they're going to be the winner in the longer term. Chris?
Yeah, just a point on charging is that my experience was that it's great if you have a 250 kilowatt hour supercharger with nobody there, it charges really fast. But once you get a lot of people there, even like 5 out of 8, 6 out of 8 stalls, the charging rate drops off a cliff. And it's been really hard for Tesla to get high powered chargers in urban, densely populated areas. So you end up driving outside the city and then you get there and the Tesla chargers are full. So I end up switching to a hybrid.
Thanks, Chris. DGM, question for you. Do you agree, though, let's say a decade, 2 decades down the line, in an autonomous world, that BEVs will win over even EREVs?
Yeah, I think with the technology that we could see in batteries and the charging infrastructure improvements, if it doesn't go like lithium ion rechargeable battery, it'll just be some other better battery. That's what I do feel.
Yeah. And then what do you think about Tesla's FSD, robotaxi, Optimus ambitions in general?
I've been long skeptical of of the based on the history of Elon's promises, it's made me really skeptical in general of the tech. Optimus, I think, is completely farcical and nonsensical ever since it was announced. Just to be very blunt about it, not take up too much time.
Yeah, so you don't see Optimus ever coming to fruition in volume?
Nothing like has been predicted or spoken about like what Elon said. Nothing like this. No, I feel the competition is just too high, and it's just all the arguments that we already know.
Yeah, I mean the Unit 3 robots that we're seeing videos of are really, really impressive. Steven?
So just back to the batteries, I was wondering if you look at cell phones, cell phone life has dramatically increased over the years, but it seems like EV batteries haven't increased their longevity or their life or their charge. I mean, is that a peak right now, or is it two different type of battery systems that we're talking about, cell phone versus EV? How come it seems like we made progress in one and not the other? I don't know if anyone knows.
DGM, you want to answer that?
No, I couldn't speak technically enough about that.
Okay, does anyone want to answer it? Steven, what do you mean we haven't made progress in one or the other? I mean, iPhone batteries have gotten really good too. Not that, EV batteries have gotten better.
Sorry, I'll clarify. So I meant overall cell phones as a whole, their battery life has improved greatly over the past 5 or 6 years. But if you look at we'll just use the Model 3 as an example, sir. If you look at the range of the Model 3 over the past, I mean, since its inception, the range is almost, I mean, in some instances it's gone down, which is kind of odd. But it hasn't gone way up either,
No, it's improved. It's improved over time. I mean, when it was first being kind of advertised, marketed in 2016 or so, it was supposed to be 200 miles, and now it can go, closer to 400 miles. So it's improved over time. I mean, some of it has been that they put, a bigger battery, but yeah, battery technology has improved quite a bit. Robert Roth, how are you? Thank you for subscribing.
Oh, sure. So on batteries, if folks just take a quick look at Layton.com and Amperes, you'll see a strong trend. And by 2030, it's going to be a doubling of capacity and the price dropping in half. In Layton, for example, it's a silicon sulfur battery that's been in pilot, and they're about to expand to a mega factory in Nevada. And you might think, well, why would you spend $1 billion on a mega factory for a startup? And the answer is their chemistry can use existing manufacturing equipment. So if they fail, you just put a different chemistry through the factory. And the other thing to look at is high density silicon anodes. They are quite surprising and making good progress. And I'm talking about in pilot or production.
Thank you, Robert. All right. Any other questions, comments on Tesla? Otherwise, I'm going to switch back to macro, and I want to read about this conference board. Chris, how are you doing? Did you sell your final shares? Are you adding to your shares? What's the situation here? Chris James? All right. DGM, are you a Tesla investor at all, or are you just kind of interested? Because I've seen you around for years, but I don't know what are you short Tesla? Are you a trader?
Yeah, I'm currently short Tesla.
Okay. Yeah. And
Yeah, it's been a long road. I on and off have been short, but now I've been short for a little while,
Yeah.
and it's starting to turn around though.
Yeah.
I'm a little bit down on it, I have to admit, but and seems to be in sight.
Yeah. Yeah. Interesting. Interesting. Um, man, this stock moves so fast. Like we went up to 488 and now it's in the two handle. It's just so crazy. All right, let's switch back to macro then. If no other questions on Tesla. I highly recommend people read the China analysis that was published on Seeking Alpha today. I tweeted it. It's somebody else's article, but I found it really helpful. So If you guys want to learn more about the Chinese market and kind of the competition that Tesla is facing in China, highly recommend reading that article. Okay. Investors flocked to Treasury bonds, sending the yield on the 2-year note to its lowest since November, helping real estate stocks rise 1.4%. Sectors which are expected to fare better despite economic uncertainty gained, with consumer staples rising 1.9% and healthcare adding 0.3%. There has been a lot of talk of tariffs, but until we really know what the policy will end up being, the uncertainty is making it difficult for the bulls to really get any kind of control in this market, a CIO of Northlight Asset Management said. Tuesday's consumer confidence report reinforced worries that the domestic economy is stalling and the U.S. Federal Reserve is likely to be cautious about cutting interest rates. Exactly what I said. U.S. Treasury Secretary Scott Bessent said the economy is more fragile under the surface than economy metrics suggest. When did he say that? Interesting. That's something you wouldn't hear from a Treasury Secretary. He said that today. Wow. All right, we're going to get to that article in a second. Interest rate futures currently point to the central bank staying put on borrowing costs for the first half of the year, according to data compiled by LSEG. Policymaker Thomas Barkin and Fed Chair for Supervision Michael Barr are expected to speak through the day. 7 of the 11 sectors traded lower. Investors also focused on a report that said U.S. was planning further restrictions on NVIDIA's chip exports to China, and that Washington was consulting with allies about tightening chip curbs on Beijing. NVIDIA results on Wednesday will be crucial for tech companies as investors have questioned the industry's heavy AI spends, especially after low-cost competition from China's DeepSeek rattled markets in January. Crypto stocks fell, with Coinbase down 8%, MicroStrategy down 11%, tracking Bitcoin prices, which touched their lowest since November. Solventum jumped 10% after drug manufacturer Thermo Fisher said it will buy the company's purification and filtration business. Okay, let's switch to these comments by Scott Bessent. I'm curious. That's kind of unlikely comments by the Treasury Secretary. Treasury Secretary Scott Bessent on Tuesday argued that the U.S. economy is more fragile under the surface than economic metrics suggest, and vowed to reprivatize growth by cutting government spending and regulation. In his first major economic policy address at the Australian Embassy in Washington, Bessent said that interest rates volatility, sticky inflation, and reliance on the public sector for job growth have hobbled the U.S. economy despite positive top-line GDP growth and lower employment. In the wide-ranging speech, Bessent blamed prolific overspending under former Joe Biden and regulations that have hindered supply-side growth as the main drivers of sticky inflation. Quote, the previous administration's over-reliance on excessive government spending and overbearing regulation left us with an economy that may have exhibited some reasonable metrics, but ultimately was brittle underneath, end quote, he said. Bessent said that 95% of all job growth in the past 12 months has been concentrated in public and government-adjacent sectors such as healthcare and education, jobs offering slower wage growth and less productivity than private sector jobs. That's an interesting stat. 95% of all job growth in the past 12 months has been concentrated in public and government-adjacent sectors. Meanwhile, he said jobs in manufacturing, metals, mining, and information technology all contracted or flatlined over the same period. The private sector has been in recession, Bessent said. Our goal is to reprivatize the economy. Bessent said President Donald Trump's administration was working to bolster the private sector's contribution to job creation, partly by slashing regulations, extending tax cuts, and rebalancing the U.S. economy through tariff policies. Bessent said Trump's planned tariffs were an essential part of this plan, with 3 main goals. First, tariffs can increase U.S. industrial capacity, create and protect U.S. jobs, and improve our national security, he said. Second, tariffs can be an important source of government revenue, which can help fund investments that benefit American families and companies. He also cited as a tool to correct and manage internal imbalances in other economies and deter excess production and supply from other countries such as China. He said that China could not be allowed to export deflation to major Western economies as it struggles with its own internal economic problem. Why? Why can't we have deflation from China? That makes no fucking sense. We want cheap goods in this country, but okay. China really needs more consumption, he said. Okay. In deciding on reciprocal tariff rates, Trump administration, including the Treasury, will examine a wide range of factors, including other countries' tariff rates, non-tariff barriers, and currency practices, Besson said. Asked about how Australia, which has a free trade agreement with the US, was doing in this regard, Besson said, so far so good, but I'm not USTR. He said they discussed Australia's request to be exempt. No one cares about Australia. Okay. All right, let's go back to consumer confidence report. Let me just check a couple of things here. NASDAQ down 1%. Not much of a change since we started the space in the markets. Tesla is testing the lows of the day at $300 per share. NVIDIA is 1.6% down at $128 per share. My price target is about $100 per share for NVIDIA. That's my first price target. The article is at the top of our screens if you care to read about it. All right. Consumer views of their family's current and future financial situation were less positive, retreating from the serious highs reached in January. The proportion of consumers anticipating a recession over the next 12 months increased to a 9-month high. These measures are not included in the calculated consumer confidence index. We talked about this already. The share of consumers expecting lower interest rates dropped further to 24%. On a 6-month moving average basis, purchasing plans for homes continue to recover, likely supported by the very recent decline in mortgage rates. Interesting. On the other hand, buying plans for cars and big-ticket items were down, with notable declines for TVs and electronics. Consumers' overall intentions to purchase additional services in the months ahead were changed little, but their priorities shifted slightly. Personal and healthcare, as well as movies and light entertainment, moved up in the priority list at the expense of streaming and travel. Vacation plans continue to trend downward. Interesting. Yeah, there's some recent weakness in vacation plans and travel. I've seen other data series as well. I guess people, got their travel bug out after COVID, after 2 or 3 years of traveling. So it's also interesting that the purchase plans for homes continue to recover while car plans and big ticket items were down, like TVs and electronics. That's also interesting. I wonder why that is. Okay. Present situation. Consumers' assessment of current business conditions improved slightly in February. 19.6% of consumers said business conditions were good, up from 18.5%. I'm going to skim through this part, see if there's any major changes. Consumers' views of the labor market were less positive in February. Okay. Jobs were hard to get, up from 14.5 to 16.3. Okay. And a slight drop in jobs were plentiful. Interesting. Expectations 6 months hence. Consumer outlook for business conditions turned negative in February, but not much of a. Oh, there we go. 26.7% expected business conditions to worsen, up from 19.6%. So that's a big jump. Consumer pessimism about the labor market outlook worsened. 18.4% of consumers expected more jobs to be available, down from 19.1% January. 25.9% anticipated fewer jobs, up from 21.0% January. So it looks like in all the categories, it's really the pessimism that increased, while the optimism decreased just slightly, but pessimism surged. Okay. Consumers were, I need to think about what that means, but consumers were less optimistic about their income prospects in February. Okay. Assessment of current financial situation became less positive. All right. Consumers' perceived likelihood of a U.S. recession over the next 12 months rose in February, but there was at a very multi-year low as low as November. I think people maybe expected when Trump comes into market it to be good for business and economy and markets and everything, but I think that sugar high is weaning off now. as uncertainty increases. The monthly consumer confidence survey based on online sample is conducted for the conference board by Toluna, a tech company that delivers real-time consumer insights and market research through its innovative technology expertise and panel of over 36 million consumers. The cutoff date for the preliminary results was February 19. 36 million consumers. That's amazing. I mean, some people have this kind of tendency to wish away survey data, but 36 million consumers is nothing to sneeze at. And my understanding is that these surveys are done in a very statistical kind of way, not just willy-nilly. All right. Member-driven think tank. Okay, founded in 1916, a nonpartisan, not-for-profit entity. Okay. All right, so that's that. Let me see if there's anything else here that we need to discuss. We talked about NVIDIA, we talked about Tesla, consumer board. There's a couple other things that were released today, I think. Let's look at those. S&P Case-Shiller Home Price Index, that's very dated data, up 4.5%. FHFA price index for December was up 0.4. Housing market is undoubtedly weakening in Q1, but this is very dated information. Crude oil down below $69 per barrel. That's very interesting too. So all the data today that's coming in, whether it's consumer confidence or market data like crude oil prices plunging or treasury yields dropping 9 basis points across the curve, this is all recession signals. Recession signals. We still can't really conclude that a recession has started, but I think the economy is on the verge of it, if not already in one. So, all right. Anything else? Let's see. Home Depot is up 4% today. I think housing stocks are up today. Not sure why. SMC is down 9%. Today, we're going to have announcements from an oil and gas midstream company, Public Storage REIT, Realty Income, another REIT, another oil and gas company. And then tomorrow, before earnings, we have Home Depot. Well, that's interesting that Home Depot stock surged. Oh, no, that's today. Okay, so I guess that's got to be Home Depot results. But the stock is surging from a very low level, a multi-month low. So let's see what the highlights on the Home Depot earnings are. So Home Depot peaked in November and has been declining in a channel, and it is about 4% recovery here. PEG ratio of 4 times. That's crazy. Price to book 69. Price to cash flow 24. And that's wild. What Home Depot earnings say about the housing market? Let's see. Home Depot reported a rise in same-store sales for the first time in 8 quarters. Roofing, drywall, and lumber sales were notably up, and sales in hurricane-hit areas also increased. Yahoo Finance Senior Reporter joins wealth host Brad Smith to discuss Home Depot's earnings and explain how these results reflect the current housing market, noting that high costs of home ownership have contributed to the existing home sales slump. Executives do not expect significant housing recovery in the near future. Okay. That's all I need to know on that front. I don't think. Oh, there's a Zoom. Zoom also announced, and it's down 9%. And Zoom stock is down about 14% in the last couple of days. Let's look at that. It's trading only at a P ratio of about 23, $22 billion market cap. It's on my list of potential longs, but let's see. Let's see the article on this real quick. Zoom forecast revenue for the full year and first quarter below Wall Street estimates on Monday, as the company navigates an environment where employers are gradually moving away from hybrid work models. Okay, I mean, that's not going to change anytime soon, so I wouldn't rush into this stock. Company shares were down 2% in extended trading and now down 9%. Zoom had seen rapid growth in users and subscribers during the pandemic-induced lockdowns, but doubts had been raised over the sustainability of the current demand for video conferencing. In January, US President Donald Trump ordered federal workers to return to the office 5 days a week. Big firms such as JP Morgan, Amazon, and AT&T have also asked employees to return to office 5 days a week. Zoom's CEO said he has no concerns about companies bringing employees back to the office on a post-earnings call. The company's overall growth remains sluggish compared to peers, and 5 years after becoming a household name, it still feels more defined by its pandemic-era surge than a compelling vision for the future, said Jeremy Goldman, Senior Director of Briefings at Emmer eMarketer. Zoom expects fiscal 2026 revenue between 4.8 billion, about 4.8 billion, compared to the average analyst estimate of 4.81 billion. Okay, I mean that's not much of a miss here, and that's a fiscal revenue. So, the integration of AI into its tools was supposed to be Zoom's lifeline, but so far it's more than an expensive experiment than a game changer. Well, that's the story of AI this year. So, I mean, I'm going to read that again because that seems to apply to pretty much everybody. Including Tesla's FSD, OpenAI's ChatGPT, and literally any side of AI application you can imagine, even Copilot. The integration of AI into its tools was supposed to be Zoom's lifeline, but so far, it's more of an expensive experiment than a game changer. Let's tweet that out. The integration of AI tools into its tools was supposed to be, we're going to take out Zoom, insert any AI company, any company, lifeline, but so far it's more expensive than a game changer. That's crazy. That's so crazy. It's amazing. I mean, like we got all hyped up on AI, and there's really no. I mean, other than Chat, I use ChatGPT a lot, multiple times a day. I know, like, I got my friends into it, but I just like I'm thinking about canceling the membership because the free version is already very good and does everything I need. And the free version is available from so many people now, so many companies. So how are they going to make any revenue, let alone profits? Chris?
Yeah, I use Zoom with clients, and the new premium version has the AI features that basically, makes notes, highlights, and it has some next steps. It's nice, but it's not convincing me to stick around as a premium subscriber.
What a great line. All right. Zoom, which also faces stiff competition from Microsoft's collaboration software Teams, forecast for first quarter revenue in the range of 1.2 billion, 1.16 to 1.17 billion, below estimates of 1.18. Revenue for the fourth quarter ended January 31 was 1.18 billion, in line with estimates. So there's no growth really. On an adjusted basis, Zoom earned 1.4 per share compared with estimates of 1.3. Okay, so they beat on the bottom line. The TechCrunch newsletter, blah, blah, blah. Let me see. Okay, so fiscal revenue expected 4.8, and this year's revenue was, it doesn't say. Yeah, I'm looking at a potential long here, Chris. I know you like the long ideas. Down 9%, 22, 23 P ratio here. Just the basic. Let's look at the basics. I might write an article on this company. Kind of interesting company. Revenue up 4% last quarter, year over year. They grow about couple percent. So there's really no material growth here. Although net income is kind of increasing, so that's good. Okay. So let me see, 2.3, 4.5. Man, such a stable revenue line item. It's crazy. It's almost like, what the hell? How is it so stable? Hold on, 2.3, 4.46, and 5.7, and they're guiding to 4.7 to 4.8. So just slight growth. Yeah, that's right. So no growth, minimal profits. I don't know where this company goes from there. I mean, if you don't have any growth, yeah, I don't know. And you're facing this back to the office trend, then you're kind of screwed a little bit in the near term, at least. I mean, not the company to get into if you think there's a recession coming, but something to keep in mind. Because I mean, they do have a brand name, it's very recognized, global, good multiple. I don't know. Interesting. Wade, what do you think?
I like the company. They're really sticky once you use it. You definitely don't want to go back to anything else. And Eric, the founder, was at WebEx, and I used WebEx years ago, and he couldn't get his feature set and everything he wanted done within WebEx, so he created his own company and really intuitive. So if people are not using it today, they'll migrate to it. There's nothing better.
All right. I'm going to look into this. Tesla's back below $300 per share. Wait, where do you think Tesla's headed next? 200 or 400?
200.
Are you short the stock?
No.
You just sell any shares?
Yeah, probably out about 80, 85%. I still have some in one of the accounts.
Wait, you sold 85% of the holdings?
Yeah, I started selling when it was over 4.
Wow, that's amazing. Congratulations, man.
Thanks. Should have, everything was heading against it. So, and the key man risk only got worse, and product and interest rate, and so there's too much headwind. That's too big of a portfolio. So I've been trimming for a long time.
So does it generate any sort of taxable income for you then? Did you do that this year or last year? You said a long time?
I have everything in a Roth and SEP IRA. So I don't tax. To me, it's not a big deal. If you pay taxes, that means you made money.
Yeah, that's great, man. That's awesome. Congratulations. Okay, that's great. That's awesome. How come you didn't go short though? You timed it really well. You said you sold about 400?
Yeah, I've been burnt on short, and I'm not a trader, so I don't want to be paying attention all the time to things. So, and I don't want to. So I haven't done shorting for maybe 10 years.
Got it. Okay. Okay, cool. Let's see. There's some Lucia, go ahead.
Yeah, man. I wanted to ask. So, when you were reading the microeconomics news, one thing that really stood out was that the majority of the job growth came from the public sector. And now with Dodge slashing employments for the public employees, do you think this is a major problem for the economy?
I mean, anything that increases the efficiency of the average worker is a good thing in the longer term. In the shorter term, it could cause a bit of a panic if they do it too quickly, but it doesn't look like they're making any. I mean, I think it's a lot of it's just kind of hype, which is very typical of anything Elon is, involved in. So there's a lot of tweets, a lot of grandiose statements, but really not much progress so far. I mean, it's got so crazy. Like X is just the information on X is really not reliable at all. And it was supposed to be this kind of like source of truth and all that bullshit, but it's not like that. Last week people got up in arms about this like rising housing inventories in the DC area, which is just complete bullshit. If you actually look at the data and you look at the people who follow this data very closely, and then you kind of even think through yourself, it's not like when someone just reads a headline, they go ahead and sell their house right away. It's not like when they lose their job, they go rush to sell their house. It doesn't happen that way. It takes like a year or 2 years before they go through their savings. Maybe they can't get another job. Maybe they miss a mortgage payment here and there. And then there's a whole long process about losing your house. So just this like hype on X, that what X has become is wild to me. But it does its propaganda job for Elon and Elon supporters. So I guess that's the main purpose. So it's doing its main purpose fine. So I don't. Long story short, I don't expect Doge to impact any sort of the employment numbers, unemployment numbers, government spending, none of that stuff. I think it's a lot of just kind of headlines and hype. I mean, it's so crazy. Like last week or the week before, they made a mistake of something like they said we saved $5 billion in this one contract, and it turns out it was like $5 million. Like, how the fuck do you make that mistake? Like, doesn't anyone just kind of sit back and say this program can't possibly be $5 billion? I mean, any sort of analyst at any company who makes that kind of mistake would be fired on the spot, and yet they're still on the job, which is amazing to me. What a shame, Luce.
Do you think it was on purpose or it was just a mistake?
Why would they do it on purpose?
Oh, so you are saying that they are incompetent, basically.
Yeah. Steven? Steven, did you have your hand up?
I did, but I put it back down.
Okay. All right. Any other questions, comments? Chris posted, one of our subscribers, posted a question in the replies. There's a link to a tweet that says median age of home buyers 56. Rising home price and higher mortgage rates have pushed the median age of home buyers to a record high, 56 years old in 2024, up from 45 in 2021. Okay. In 1981, the median age of home buyers was 31 years old. Yeah. I think, a function of this is that the home price, like how many years of savings you have to have, how many years of working you got to do to be able to afford a house has increased dramatically over the decades. So that's primary reason. In the last couple of years, from 2021 to 2024, I'm guessing that has more to do with, baby boomers have really benefited from the rise in asset prices because they have massive savings. I mean, we're talking trillions of dollars savings in baby boomers. And millennials haven't fared as much, or um, you know, younger generation than millennials haven't fared as well as baby boomers in the last, the recovery from COVID. So there's a K-shaped recovery going on. We're seeing this across every macro data you look into. You kind of see this kind of divergence between older folks and younger folks. You just experience a different type of economy, and so I think that's the reason here. The last time we saw this kind of surge, it looks like in this graph, was right after the Great Recession, and was right after the 1991 recession. So, yeah, a similar idea, I guess. All right. Yeah, I get these comments from NVIDIA folks a lot. It says, I live in Argentina and many businesses are buying RTX 4060 to run open source models I would not go against Nvidia for now. And then we also saw other people reply to my article and said something like H20, demand is surging because of DeepSeek. I'm like, just look up the price of these products. They're not as expensive, as profitable as H200s or the leading products. I mean, I think Nvidia has a very kind of like a barbell shaped profit profile for their products. So kind of like Tesla, the Model S, Model X is a lot more profitable than a Model 3 standard range. So all right, anything else? Let's see if there's anything else. Luce?
Yeah, man, I had a question about your NVIDIA article, if I may.
Yeah.
So, reading your article, it seems like you forecast still a big growth for NVIDIA going forward 2025, 2026, right? If I remember correctly,
Yeah.
you said, yeah. And also still very good margins, right?
Mm-hmm.
And so what I'm saying is that, if anything, I thought that your forecast was optimist about the company.
Yeah, I think so too. I'm going to publish another one after earnings, and I'm going to do preview post review type of articles after earnings for Nvidia. So I'll adjust those numbers every time. Lucia?
So I had another question. So tomorrow, everybody is waiting for the NVIDIA earnings.
Mm-hmm.
And so when tomorrow I'm going to open those earnings, what is that I should look for super fast to see if the market is basically going to go down or up? Like, what are the critical
I mean,
data
that's
that I
kind of
need
like a
to know?
short-term trading type of question, which I don't do. Even in Tesla or Nvidia, there's really nothing that I'm going to see in earnings releases or calls that would change my long-term view of a company. If that's the case, then it just means you don't understand the company well enough to invest in the company. So one of my goals going into Tesla earnings is I don't want to see anything I did not predict. If I do, then there's a problem. Then I need to kind of understand that section of the company better. And in the last, like ever since I've been hosting Tesla Live, that's been the case. And then for NVIDIA, I think I'm getting to that point now. So I don't want to see something that, I mean, like Jensen can say something like, we're going to grow 50% per year for the next 20 years. That's not what I mean, right? That's just management corporate puffery. So let's go back to corporate puffery here. Let's pin this quote from Elon's lawyers at the top of our screens, which I think every investor should frame and put it on their wall. They should look at this picture before they go to bed every night and after they wake up at least twice a day, just kind of like you brush your teeth. You should read this out loud when you're investing in a company. So Elon's lawyers say defendants next argue that several timeline and safety statements are non-actionable statements of corporate puffery and optimism. In the Ninth Circuit, quote, vague generalized assertions of corporate optimism or statements of mere puffing are not actionable material misrepresentations under federal securities laws because no reasonable investor would rely on such statements. Okay. So Elon was able to kind of argue his case and get out of being liable by saying that this is just corporate puffery. I'm just being optimistic. So any CEO can say that clearly. Any CEO can make any claim. I mean, Elon was saying as late as Q3 2022 that Tesla was going to grow 50% per year as far as the eye can see. And it's 2024, no growth. 2025 is going to be negative growth. So it's clearly wrong, and there's nothing wrong in the eye of the law of being optimistic, making these grandiose statements, and being wrong in the end of the day. So as an investor, you have to, or I have to, let's say, I have to gauge what is real, what's the actual feature versus just mere puffing. So Jensen's going to come out on Wednesday and he's going to make all sorts of positive statements. He's going to downplay DeepSeek. He's going to talk up their prospects for Blackwell. And then the CEO for it is going to talk about their margins for Blackwell. None of that matters. None of that matters. I could go with skipping NVIDIA call tomorrow and it'll be just fine because I don't need to hear what they have to say. I've done my fundamental analysis on these companies. I think I'm right. If something changes, it's probably going to happen by some sort of news article that comes out outside the company's announcements. But so far, what we've heard from DeepSeek type of analysis, DeepSeek type of news, or the demand for H20s as opposed to H200s. What we've heard from other companies, their suppliers and channel checks and everything. What we heard from Microsoft CEO, that's all been in line with my short thesis on NVIDIA over the last 6 months. I only shorted the company about 2 months ago and increased my short about a month ago. So, we'll see. Maybe I'm right, maybe I'm wrong. I don't know. Time will tell. Maybe I'm way off. Like we also have Wes here who worked at Tesla, Google, and SpaceX, who is long on NVIDIA, who also just added 1,000 shares of Tesla in today's dip. I know other people who are calling this to be the bottom in Tesla stock. So maybe they're right. I don't know. But I feel confident in my investment thesis and my work I've done. So we'll see. We'll see what happens tomorrow. All right. On that note, we're going to end today's space. Thank you very much, everybody. Robert, thank you very much again for subscribing. And I will chat with you all next time. Take care, everybody. All right. On that note, we're going to end today's space. Thank you very much, everybody.